Another thing that's very, very important is key levels. Now, support and resistance can be classed as key levels, but there are other levels which are key, which I think are very, very crucial, and we want to know how can we trade from them and what are they used. So let's go back to our chart and have a look at what's going on. So I'm going to pick let me pick a stock. Okay, let's pick Apple. Apple stock. Let's go into a 1 day and let's see exactly what's going on. In fact, you know what? Let's go into a 1 hour. So we had the iPhone 7 recently come out, and each candle is representing 1 hour. So what is important and why? What other levels are important and why? It's important to understand where the market closed yesterday. So yesterday's close, yesterday's high is very important, yesterday's low is very important. And then today, what's the current high of the day, what's the current low of the day, and what was the opening print of the day? Because those levels come into play as a trader. If you can see here on Apple, look, we've gapped up here. There's the open, there's the close, a big gap up, and we haven't filled the gap. The next day, if we're trading this day here, and each candle's representing an hour, don't forget, this is a very important level. The high of the prior day was broken very early on in the morning, and that's showing us the strength of the market. You're understanding that not only have we gapped up because the close was here, the open was here, so we have what's called a gap. In other words, the open is higher or lower than the prior close. But not only that, but we are then going above the prior day's high. That's giving us a signal that this market is very, very strong. So understanding where we are in relation to the prior day's trade is so important. So the key levels to always have on your chart are the prior day's high. And let's have a look at, let's go to the DAX again. The prior day's high, the prior day's low. Let's go to a 5 minute so we can zoom right in on it. Look at this now. You can see the prior day's low we had was here. So I'm going to get myself a horizontal line. I'm going to put it on there, and I can see what the price response was when we got to that. I'm not going to go into too much of the concept now, but just understanding, look, having that had it marked on our chart, we could see that we pushed through it. We had a little bit of a tail form, and then we pushed right back up again. And then it's the same during the day. You know, during the day, I'm going to mark off my high of the day. So just after sort of 20 past 8, we had that high, and we sit in the choppy area. And then this is what caused a little bit of a spike in price, is that we ended up pushing through that key level, which is today's high. And I'm also going to have on obviously yesterday's high on my chart should we get to that level. So it's very important to have the high, the low, the prior day's close, and the current high and the current low and the current open, because they're very important to understand the relationship of current price position compared to those.